Aashish, now coming back to the discussion on the portfolios, there are a lot of investors who have joined, and some of them have already invested in our portfolio. And what was happening is they were getting some mails that you know, as a house, you manage both mutual fund PMS, in fact, AIF as well. So there are some PMS time, because we are only focused on alternate investments and portfolio management services. So the first question that I got from this investor is that, you know, what is the difference? Like, should we consider mutual fund now that, you know, WhiteOak was initially not there in the mutual fund, now that they are there? So why should we consider only investing in PMS and mutual fund? So I said, let me get Aashish first, and we'll directly hear it, you know, from horse's mouth, as in, as a fund house, what would be your advice? They have already invested in PMS and they're looking at topping it up. Yeah.
See, I think there are two different objectives. Mutual fund is a mass retail product. You know, so when we are managing a retail product, it's not necessarily that we are trying to maximize the alpha. The point is that when we are managing a mass retail product, we are mindful of you know, consistency, mindful of not exposing the portfolio to extremes, and trying to keep the variability low. Right. So ultimately, equity as an asset class itself is highly variable. But the point is that when we are managing a mutual fund, we would like to keep the variability of alpha or the fluctuations lower or range bound. So it's like this, that in a PMS, for example, the portfolio may deviate significantly from BSE 500. Right. BSE 500 has 21% in small and mid cap. In our PMS, we are anywhere between 30 to 50% small and mid cap. In BSE 500 has companies which are oil, metal, commodity. It has companies which are PSUs and so many things. But in our PMS, we are persistently overweight small and mid cap, and we are persistently overweight on high governance. Irrespective of whether we get underperformance or outperformance or whatever, there are some things which we don't compromise. And you know, so in the long run, that gives us higher alpha, but in the short run, it can also cause underperformance. If you see January to May 2022, the reality is that we were significantly underperforming. January to May, why did we underperform? Because we were 2x the weightage in small and mid cap as compared to BSE 500. And even when oil, metal, commodities and all these complicated conglomerate companies, even when they were going up, we were staying away. So January to May, because of that big deviation from the benchmark, January to May we underperformed. And after June onwards, we are 3-4% ahead of benchmark. We started recovering. So this is PMS. But if it was a mutual fund, you know, we would, whatever our bottom-up strategy says, in a mutual fund, ultimately what we will do is that we'll ensure that we have certain risk norms and we don't deviate from the benchmark beyond a certain limit of tolerance. So in our PMS, we don't have, you know, PSUs and we don't have conglomerates and all. But in our mutual fund, considering that they are part of BSE 500 and we don't want to deviate beyond the point, we want more consistency and stability in the portfolio. So our mutual fund deviates less from the benchmark, whereas our PMS deviates significantly. So long story short, if I have to project or forecast, I would imagine that our PMS potential to generate alpha is higher, but with more variability of alpha. In the mutual fund, we might end up with slightly lesser alpha, but less variability also. I think that is how the difference is. We are fully capacitized to manage both, but the objective of both is different. That is what one has to keep in mind.